So the Federal Housing Finance Agency, led by Bill Pulte, has been very active lately. They're basically trying to figure out a way and offer solutions on how do we unfreeze this frozen housing market that we've been in for the past 3 years. Now, when I say a frozen housing market, I'm not talking about prices crashing or anything like that, but it's just more of the amount of transaction. It has literally stalled and has been kind of stuck. So there's been all kinds of suggestions being thrown out there by the administration to trying to offer solutions to this housing market. So we're going to touch on 3 real quick. Some of these you guys have heard, but the last one maybe not so much because it's the most recent. So let's start with the 50-year mortgage. This has gained so much popularity. I see it everywhere on social media. So I'm just going to be quick about this one. The first question I have for all of you out there, did you even know that there's a 40-year mortgage? Many people would say no to that, but there's been a 40-year mortgage out there. The problem is it's not very popular. This is my thought with the 50-year. So the 50-year, we don't even know what the interest rate's going to be, but we can guarantee it's going to be higher than the traditional 30-year mortgage. The longer the term of a mortgage, the higher the interest rate. So you're going to have a slightly higher rate, but by stretching it over a 50-year term, so 20 years more than the traditional 30, yes, the payment is going to be lower. Is it going to be significantly lower? It depends on the consumer, what they consider significant. But my only issue with this mortgage is that even though it could help some first-time home buyers and some people get into a property, my concern is after 10 or 11 years, because that's the average time someone stays in their home. After 10 or 11 years, when they go to sell and possibly upgrade to a bigger property, like most Americans do, is that now they're going to have less equity. If they've just been making that 50-year mortgage, because remember, it's very front-loaded with interest. So 10 or 11 years later, after a 30-year, you're going to have more equity than you would on a 50-year. So therefore, their net gain on that sale is going to be less. So that's one of my main concerns with the 50-year mortgage. Number 2 is the recent announcement regarding credit scores with Fannie Mae. So Fannie Mae right now has a minimum credit score of 620. They're now removing that threshold. So before people get excited about this, the Fannie Mae system, the automated underwriting engine that they use, they look at all levels of risk. So it's not just your credit, it's your income, it's your assets, it's the type of property, etc. So someone under a 620 score, even though if they're taking away that threshold, it doesn't guarantee that the person is going to get approved. Matter of fact, I would probably say it's very unlikely. And even if it was likely, FHA usually picks up the slack in that area. So people with credit scores below 620, they're usually going to be better suited for FHA regardless. So I really don't think there's much here. I don't think this is anything to get excited about or move the needle, but it's just something else that we do have at our disposal now if the opportunity presents itself for some consumers. So number 3, and this is the most recent, is portable mortgages. Can you take your existing rate and mortgage and port that over onto a new property if you were to purchase? So all these people that refinanced during the COVID years and got 2, 3, 4% interest rates, could you now take and move that to a new property? Look, this one I really struggle with. I want to get on board with this one. I want to like it because, one of the biggest things with the frozen market is this whole lock-in effect where people that are, sitting on a 2, 3% interest rate, they feel locked into their current property. They don't want to move because they don't want to lose that rate. So there's some validity there. I get that. And, maybe allowing a portable mortgage is that now people would want to move, right? They would take that and move it on to the other property. Now, the only concern with that, it kind of like assumable mortgages. Assumable mortgages do exist. You just don't see a lot of it because it's got to be the perfect situation. First off, not all mortgages are assumable, but I'm not here to talk about assumable mortgages. The thing about portable mortgages, first of all, the situation has to work out perfectly for a buyer. In other words, if they're going to buy a new house for a certain price and they're bringing their existing mortgage over, they have to be able to bridge that gap between the sales price and their new mortgage, kind of like an assumable mortgage. So it's not going to work for everyone. But the issue I have with that is what is that going to do to the lending and banking industry? You are now talking about existing mortgages now were designed to be, they have a due on sale clause. Like once you sell, that mortgage is supposed to be paid off and onto a new one. Most servicers are expecting a certain lifespan of a mortgage when they take it. Well, we're now kind of changing the rules after the game has already started. So what impact will that have to the lending and banking world? Also, too, selfishly to loan officers and bankers, loan originators. What does that mean? Because we are compensated on loan transactions. So if people are able to bring their loan to a new property, well, that just eliminates the need for a new mortgage on that property. So that's going to have big ramifications as well. So there's a lot behind this. I think this one would be extremely complicated. And like I said, I want to get behind it because anything that would unfreeze the housing market is going to be good for the housing market. I just think this one, there has to be a lot of thought considered because there could be some unintended repercussions by implementing this. So listen, I do applaud the administration trying to think of ways that we can help the housing market, but I think we've got to dig in and go a little deeper and find some other ways as well, because some of these, I don't think it'll move the needle too much. But hey, we should be open to any ideas at this point. If you have any questions, feel free to reach out. Make it a great day.